Hello, everyone. This is Dave Allison with Alison Wealth. Thanks so much for jumping on our channel to watch this video. We're going to be talking about President Biden's recently proposed 2025 budget. Now, this is what's known as the Greenbook. It just came out. I have a copy of it here on my iPad, March 11th, 2024. It is a few hundred pages long on things that Biden and his administration would propose to be able to effectively run the country next year. Now, a lot of these proposals are tax changes, which is why I'm so interested in reading through this proposed budget. Because these tax changes, while they have kind of a mountain of things they would need to overcome to actually become law, they give us the best glimpse at what the future of taxation could look like. And they help us at Alison Wealth Management stay 2 steps ahead of what these policy changes could mean for our clients, particularly our high net worth and our ultra high net worth clients. And so what I want to do in this video is give you a quick summary of what President Biden is proposing in his budget. And again, I stress the word proposing because it would have to pass the House and the Senate. It would have to be bipartisan. And there's a lot of things that'll change between when an idea goes from a budget proposal into actual law. But again, it really helps us be proactive at thinking about blind spots or areas that we need to consider when we're doing advanced planning for our high income and high net worth clients. And so I want to go through some examples of things that really stood out to me reading through these few hundred pages of proposals. The first one is that there was a big section that President Biden titled Strengthening Taxation of High Income Taxpayers. These were a whole bunch of proposals that would really impact many people that are earning over $400,000 a year, married filing jointly, and around $200,000 to $300,000 a year if you're a single filer. I'll just kind of read through some examples of things that this administration is proposing. And really that kind of gives us some insight into things we need to be talking about with our clients as this might impact their financial future and their financial situation. So the first one is any clients that are small business owners. Typically, a small business owner is going to have a pass-through entity. That could be a sole proprietorship. Maybe you're in a partnership, LLC, or maybe you have an S corporation. So right now, any income distribution from that pass-through entity is not subject to that 3.8% net investment income tax, or that Obamacare tax that it was known as when President Obama put it into action several years ago. Well, what we're seeing in the proposal is that President Biden wants any of that pass-through income from those businesses to also be subject to that 3.8% net investment income tax for anyone who's over between $400,000 to $500,000 of adjusted gross income. He's also proposing an additional 1.2% Medicare tax increase for anyone over $400,000 of income that is married filing jointly, and an additional 1.2% increase on that net investment income tax. So that would take Medicare tax and the net investment income tax from about 3.8% up to about 5%. Pretty meaningful tax increase for any high income earners out there. He's also proposing that the top marginal bracket go from 37% up to 39.6%. What this proposal would do is any married filing jointly tax status of somebody earning over $450,000 would now be subject to that 39.6. So it's not just the bracket that's going up, it's that the income is getting compressed. So you don't have to have those really high incomes of over $700,000 to hit that top bracket. Now anyone over $450,000 would. There's huge changes in the proposal to the way capital gains tax works. So this is if you earn your money, then you take that money, you pay tax on it, You invest after-tax money in stocks, bonds, mutual funds, real estate, cryptocurrency, business interests, and hopefully you earn a gain in that investment over time and you sell and realize that gain. You pay another tax. It's a capital gains tax. It's just on the amount of appreciation. And today it's preferentially taxed at either 0%, 15%, or 20%. Well, this administration is proposing that for anyone who has total income of over $1 million, any capital gain is taxed at ordinary income. That would be that top rate of 39.6%. So if you have capital gains and you realize a large gain in a year, or you have high income, you would go from paying a top rate of 20% to a top rate of 39.6%. Plus that net investment income tax on top of it. So you could be easily at 43, 44, 45% tax rate instead of the top rate of 23.8% today, which is the 20% capital gain plus the 3.8% net investment income. So big implications to people who have capital gains exposure potentially. In addition to that, they're proposing that the gift tax is changed for when people gift those appreciated assets. Maybe you're gifting it to a charity or a donor advised fund. Not really too many changes there, but if you're doing intra-family gifting, there could be a recognition of tax at the time you gift, as well as at death. And so right now, if you were to hold an investment in a post-tax account and it's got substantial appreciation and you were to pass away, your beneficiary would inherit that asset income tax free. But under the new proposal, that unrealized gain would be taxable at the date of death. It would be an elimination of the step up in basis. Now, in the proposal, they're sharing an exemption of about $5 million. But again, for some of our high net worth and ultra high net worth families, that could create a new large exposure to taxes that we would need to account for in your estate or legacy planning. They're also imposing a minimum tax for the really wealthy, anyone over $100 million. A 25% minimum tax. That's on both earned and unearned income. So this is like a wealth tax. Again, the jury's out if this is even constitutional, but again, that could be an enormous tax change. Very, I think, unlikely that it'll happen, but you never know. But things that would impact our everyday high income earners is they want to limit rollover and conversion options for the Roth account. So if you're over that 450,000 of income, they want to eliminate your ability to convert to a Roth account to build tax-free money up forever. They even want to eliminate some of the advanced strategies that we utilize, like a backdoor Roth conversion for high income earners. So that's a big deal again. So that gives us a window where maybe we want to be more proactive about Roth conversions now while we know the sun is shining and we could go make hay, because if Congress eliminates the ability for high income earners to do Roth conversions in the future, that could eliminate a huge planning opportunity to build tax-free wealth for you or your family. They want to expand some of the child tax credits. That's really great. Of course, a lot of these taxes on the higher income earners are going to be able to go to support some of the increased tax credits for things like child tax credits or tax credits for lower income individuals. They want to make permanent the Inflation Reduction Act health insurance premium tax credit. So again, that could impact some of our clients who are retiring early, before age 65 when Medicare kicks on, and they need to go to the marketplace for their private health insurance. So that allows them to be able to receive more affordable health care. That's a good thing. Again, there's some really advanced income planning to be able to maximize those tax credits for our clients that are retiring early. They want to change around the annual gifting tax limits and exclusions. So right now, we can gift up to $18,000 a year to as many people as we want. They're proposing to change that to a annual total exclusion of $50,000 per year. So that would change around how we do a lot of gifting or fund advanced estate plans. They want to eliminate the generational skipping tax exemption. That could again impact some of the trust work that we do, estate and legacy planning. There's proposed changes to GRAT rules. That's grantor retained annuity trust, and what happens to that GRAT once the GRAT term is expired. They want to tax carried interest as ordinary income. That really only impacts like the hedge fund managers and some other people that have been able to really structure their income as carried interest. They want to repeal the deferral from like kind exchanges and limit it to $500,000 to $1 million per year. That could have massive implications if you're a real estate investor buying rental properties, that you are doing deferral of like kind exchanges. And then last but not least, a proposal for 100% depreciation recapture as ordinary income. Again, a huge impact to anyone who's buying rental properties or real estate investing. So those are just a lot of the things that impact high income earners. There's also some big changes for corporate taxes, proposal of going from a 21% rate up to a 28% rate. There's a proposal to implement a 4% excise tax on share buybacks. We know from an investment management standpoint, share buybacks have been very beneficial to the stock market in driving stock prices higher. That'll be interesting if that ever got proposed, what impact it might have on stock market returns. So again, as you can see, a whole bunch of proposals. And the reason I feel this is so important is we as an advisory team working with our high net worth and ultra high net worth clients want to be proactive about looking at what public policy risk is out there. Which of these laws actually have a good chance at getting bipartisan agreement and implemented into law that could impact your financial future? You've heard me say many times on these videos, it's not just about analyzing your situation today. It's looking out 5, 10, 15, 20 years from now, thinking about your lifetime taxes. And that's such a big differentiator in how we work with our clients at Alison Wealth Management. It's not just about maximizing your situation today. It's also looking into the future and trying to apply some of the insight that were given through these potential tax changes to help maximize your situation. Again, we'll keep you informed as we learn more, as Congress is meeting and they're throwing around some of these different tax changes and how they could impact your financial future. Don't forget to subscribe and reach out to our team if you have any questions.